Hello and welcome back to today's episode. Today's episode, we are looking at Volatility 25, top-down analysis on Volatility 25, synthetic index. All right, I would like to welcome you back to the channel. For those of you who have been away, yes, I've also been away for a while, but I'm looking at giving you a video every week. Okay, so I would like you to stick around. If you're new to this channel, please do well and subscribe because there are tons of videos that is going to help you in your trading journey, especially for those of you who have been trading volatility pairs, the synthetic indices pairs. A lot of questions people do ask is, does ICT strategy really work on volatility asset pairs? And I'll give you a very fat yes answer. You know, um, if you are going to stick with me, I'm going to give you clues and guidelines on how to actually use ICT strategy in trading volatility pairs. All right, so let's delve into today's video. But I would like to state that this video is not an investment advice. Okay, so please trade cautiously. All right, let's delve into volatility 25 asset pair. And I would like to also emphasize that all the strategy and all the clues that I'll give you really works on all other tradable volatility synthetic pairs using ICT strategy. All right. So everything that I'm going to state here is going to be purely ICT strategy. All right. So let's delve into today's video. Now, this is a chart that is depicting volatility 25 monthly time frame. Now, I know people ask, so as you see the monthly time frame this way, how do you go about trading it? Now, I would like you to pause this video, take a good look at the chart you are seeing, and look at what is happening on the market. And ask yourself, are we in a bearish market situation or are we in a bullish market situation? Number two, has market hit terminus, and that is it reversing or is it doing a form of retracement or is it doing a form of accumulation or is it doing a form of expansion? So when you see a crude depiction of a market situation like this, first of all, I would like you to look at where currently the market has just traveled to. Okay, now let me quickly show you what is happening here. Now look at this high in here. Can you see this high in here? What are you seeing? What the market has just did? The market just traded all the way from this area higher, sweeping all the buy stops resting above this high. So when you have a market situation like this is what you see. We can see that the market has traded high and it has taken all the buy stops resting above this high. So what is resting above this high? In ICT's theory, or in Michael's theory, what we see resting above this relative equal highs is called buy stops. Now, the retail society have a crude depiction of what resistance and what support actually is. Now, when we look at this chart, the typical retail society would say that when price gets to this point, we expect price to bounce back down. So we are not expecting price to even trade above this high in here. Even if it does, we are not expecting it to swing and go up this high. And that if price trades above this high, we are looking at price continuing to go up higher. But I'm asking you a question. I would like you to pause and answer it. That when price traded above this high, did it continue going up higher, or we are seeing a form of retracement downward? I know your answer, obviously. The market traded hit the high in here, where the retail society believes that the market breaks this high and then it's going to continue buying up higher. Now the market breaks, buys a little bit higher, and then we see a form of retracement downwards. Okay, now beautifully, price has done that. It has traded above this high, swept all the buy stops that are resting above it, hoping that the market is going to go higher, and then we see a form of retracement. Now the market is trading against all those who are holding their buy positions above this high. All the buy positions above this high, the market is trading against them because it has triggered their orders, and then it is rather trading lower. So in this situation, all those who are their buy stops above this area that they called resistance has been triggered, and then all their orders are running in losses. So the market is engineered in such a way that it's always trading against the retailers. Now, since we have seen that the market has traded this high, and then we see the reversal now, or we see the retracement. Now, where are we likely targeting? There are buy sides. These are orders that are resting above this high in here. It has been triggered. These are liquidity that is written above it. The market has swept that liquidity. Where else do you think the market is targeting? Or where else do you think this market is going to carry all the orders that has been triggered in here to? Now, we have to refer to another liquidity point that price likely may in turn drive towards. Now, to understand where price may likely go, you have to go down sometimes to areas where price came from and see the past actions that price did. Now, what could we see price did before it rallied up towards this side to sweep all the buy side? Now, we can see from here that all this area of consolidation, before price broke out of the consolidation, it left its fair value gap. Price retraced back into this fair value gap, and then we saw the expansion higher. We saw a retracement back into this area where we regard this particular bearish candle in here as an order block, as a bullish order block. And when price traded into this particular candle, this bearish candle, we saw price rally back higher again. Now, from that point where price rallied back high again, do we have any reference point for price to actually trade down towards or trade down to that has some form of liquidity that price can take? Some may say yes, some may say no. Yes, from what perspective? Yes, from if we are looking at it on the monthly time frame, we can see a couple of areas where price can go into. Now, where are those reference points? We have all these areas resting in here where we have price traded just once above, and then this area all the way up here. So we have a form of buy side imbalance resting in here, another buy side imbalance resting in here, and we have another smaller buy side balance resting in here. Now, all these areas we will refer to as the fair value gaps in ICT's terminologies. Okay. Now, when we look at this particular bullish order block, which in a way we are referring to this bearish candle in here, you could see how price traded into it, and then we saw the reversal. Now, we are seeing this tiny not so tiny, but this particular candle right in here, this bearish candle right in here, that traded also into this particular bearish candle, and then we saw price rallied up. So now it also in a way becomes another form of order block. So another block which is residing in another order block, we may refer to it as the proportion block. But take your time. So I saying that, so then you quickly draw conclusion. Oh, then when price trades into this proportion block, we are expecting price to rally up higher from here, continue to rise. Please relax. Not every proportion block or not every other block may effectively act as an order block or a proportion block. We may classify it as a proportion when price trades to it and we see the reaction at that area. So when price trades into this area, whatever reaction we would have in here will determine whether this candle in here, this bearish candle in here, is a proportion block or not. So we want to see how price would trade back into this area and then see how it reacts. Price may decide not to even trade all the way into this area, may just leave all these gaps, and then we want to see price go up higher. What will be the ultimate target? Price just took the buy side liquidity resting above these highs. Is there any other reference point that price can equally go and take? Just above it, we can equally see that there is this swing high in here that also has some buy side residing above it. The price can equally go back and then take all these highs residing above this high. But what are we expecting? So we want to see price do the reversal. Now, look at the high in here. Okay, the high in here. I didn't capture that, but the high in here on this particular bearish candle is the highest point among all these consecutive highs in here. This bearish candle has the highest price level, and when we look at the bodies of all these swing that has been formed in here, we haven't had the swing formed totally because this is a new month's candle. It hasn't closed yet. All these candles forming in here, the bodies of the candle are not closing above this high, which gives us a clear picture or a clear depiction that we are actually having a failure swing in here. So this is a failed swing. Okay, so market is not closing above it, so we can clearly, this is a clear sign of the fact that we're going to have a form of retracement. Okay, so should this bearish candle or should this particular candle in here close this bearish, we may likely have another bearish month downwards. Okay, it gives us a perfect swing in here, then we likely have another swing, maybe another what's the name, candle giving us a bearish. So then how do you frame your trades? You want to wait for retracement and then have a sell entry somewhere, but that's not what we are looking at now. We are looking at the current situation. Okay, now price is looking at trading downwards towards the side. Now let's go to the next slide. Just like this area where we have the other fair value gap, price trades into the fair value gap, goes up, comes back into it again, and then we have all this area, this particular candle in here forming the proportion block into this particular consecutive down close candle forming the other block. Now, what is our expectation? Is price going to come down? Now, let's look at, this is on the weekly time frame. Let's look at how price may even respond on this weekly time frame. Beautifully, price can easily trade into this fair value gap and then reverse from here and say, I won't continue down, I want to reverse. But what will give us a clear depiction of the fact that price would want to continue higher or it wants to continue lower? So beautifully, can you see all these bearish candles residing inside of these consecutive swing in here? So this bearish candle actually can be regarded as a bullish order block. These other candle can also be regarded as a bullish order block because at this point it helped price to rally up. Now we would want to consider that where price has got into, if price trades and closes beneath, or price trades below this bullish candle in here, then this bearish candle in here, which is acting as a bullish order block, becomes an invalid order block, or the order block has been invalidated. Then we have a clear path that this particular price is going to continue trading downwards to seek for other sell side liquidities resting further lower. So we are waiting. When price gets here and you're not even certain, what you can do is that you can wait for price to invalidate this order block. Then you know that there are further price actions, or there are further bearish price actions for us to pursue. Can you see all these three consecutive down close candles in here? These two down close candles in here, and then this other bullish candle in here. There is what we call trend line phantom, taught by our mentor ICT, that when we have such, we have a very strong pool of liquidity resting beneath all these kind of phantoms. So price, if it invalidates this particular order block in here, we are likely going to attack all these sell side liquidity resting below this areas. And then coupled with the fact that just beneath this trend line phantom, okay, we have an area of imbalance, a buy side imbalance in here, which is a fair value gap. So likely price can, if it breaks below this bullish candle in here, invalidating this order block, then we are going to target this area. Okay, we are going to target this area. Then when price gets here, we want to hold. We want to look at how. So for instance, if you get a trade somewhere in here and it gets here, don't say, oh, I'm going to hold on till it goes down further. Now watch this. This particular candle in here can be a point of reversal. We'll talk about that later. Okay, so when price gets here, you exit your trade, and then at least you have a fair amount of, what's the name, trade that you can walk out of for the week. Okay, now let's look at this area where I've highlighted red. Why did I highlight this area red? Now this area shows you how price, this is the area above the swing that was taken, and then we had to see the retracement. Okay, so this is the area which price swept, and then we saw this form of retracement in here. Why am I calling this retracement and not reversal? We may call it a reversal when it breaks below this low, and then we know that there's a shift in market structure. But in as much as the market structure hasn't shifted, we still regard this as a retracement until it breaks a structure. Okay, now beautifully, this area is where the orders were paired. Okay, so all this body of the candle above this high on the weekly time frame was hedging or pairing all the orders that were above that monthly time frame high. So all these orders, it's just giving a clue that, oh, I'm going to continue higher. Then all the retailers were just continuing buying, and then we see a sudden breakdown and then a rally away from the high. Okay, and now beautifully we have this happening. And what's next? So when we look at this chart, apart from the orders being paid in here, and we are looking at this area as a form of liquidity pool that price, if it invalidates this order block, can draw into. Can you see that on the weekly time frame, this area are regarded as relative equal lows? Can you see the lows in here being relatively equal? Can it be a draw on liquidity that price can trade all the way into this area? Is it possible? Yes, it is. It can be. All right, but then once we are not there, we cannot easily jump and draw conclusions. All right, so I was just trying to let you understand that it is possible price can draw into this area of liquidity and invalidate that monthly order block that we saw in there. Now, Where are some of the area of area of core apart from this area that we saw the fair value gap resting, the buy side imbalance resting? There is another form of fair value gap resting in here. There is another one resting in here. Now, all these areas are area of core where price can actually trade into. So once we have this price trading around this area, all these areas are point of liquidity pools that price can dip into. Nevertheless, we cannot just draw conclusion from this area that price is just going to dip all the way down this way. Okay, so just like I said, until certain things happen, then we have the clear cut path that we are going to have price trade down, or we are going to have price continue the upward trend. All right, now let's come down to the daily time frame and see if you were on the market, how would you have even noticed whether we had a retracement? Do you have entered a trade using ICT's ideologies on the daily time frame? Clearly, you can see that we have this particular fair value, and this is the line that is showing the area above the high, the monthly high that was swept. Just all these areas accumulated some orders in here. Just as market expanded higher, market left a fair value gap before the expansion higher. This fair value gap that was left, okay, market came back to, rebalance the fair value gap that it left, traded higher, came back into it, fully rebalanced with the body of the candle. Now, in as much as this candle has been, or this area has been rebalanced, now that area that has been rebalanced, when we extend it, or the previous fair value gap that has been rebalanced, now becomes an inverted fair value gap. And this was the fair value gap that was left just before price rallied above that high. Now I want you to take note of these kind of fair value gaps. Okay, these kind of fair value gaps that are easily formed just before price rallies above highs. Okay, not any other high, but important highs and long-term highs. Okay, when price leaves this form of fair value gaps and then pair the others above it, and then we see a retracement. Or most often, this fair value gap in here becomes an inversion, and then price based on that inversion trades off on that inversion. Okay, so you could see how price traded into this inversion fair value gap several times, and then we saw a rally down. Okay, now you are seeing it on the daily time frame, so it's like, oh, how would you be able to trade such inversions? Would you just see any trade? For instance, if you're in the market and you saw this inversion and you said price has just dipped into it, so you take a trade somewhere in here. You see how it went above the inversion before, traded down, came back into it again, and then we saw. So the uncertainties around trading with inversion gaps are a bit complex. So you may have to look at the chart um, in a certain way. But now, was it just the inversion that gave us the clue to just jump into the market? No, we had a shift in market structure. Okay, on the higher time frame, this is the daily. So we had a shift market structure after price swept the high on the monthly. We had a shift in structure. So from this low to this high to this low to this higher high, and then we have a lower low. Okay, so automatically price has broken this low in here. So we had a shift in structure, and beautifully, once we have a shift in structure, we always wait for price to retrace back into premium, which is 50% of the swing from this high to this low. Do we wait for price to go back into 50% so that we said we are in the premium, we have premium prices, and then we trade into discount? It is not always the case. Okay, it's not always the case. Why? Because in this situation, we had this inversion fair value gap in here, which acted as a very strong resistance level. Okay, so now suddenly I'm using the word resistance. So am I saying that I believe in the retail? Well, now this is what we call real resistance. So the real resistance in the retail on the market makers are such areas. Okay, these are what they call real resistance, not lines that depict just a line or just a line that has been drawn and we want to just trade below the line or above the line. But these areas are the real resistance. Okay, so beautifully price breaks and then what happens? So if you take your fib from this high to this low, let's take our fib from this high to this low. From this high to this low, you could see that price traded into the 25% level and severally price was trying to push further, but then the real resistance, which is the inversion fair value gap, was the real resistance and then it pushed price to go down further. Now, one of the things that you should also take note is that in such situations, there are a lot of things that will give you confirmations. For instance, this inversion fair value gap that you are seeing on the daily time frame, when you look at it on the 12-hour time frame, when you look at it on the 8-hour time frame, when you look at it on the 4-hour time frame, and you have confluences, like it overlaps. You have it on the 8-hour, you have another the same fair value gap on the, it might not be the same, but then you have some level of fair value gap overlapping with this higher time frame fair value gap, which is a fair value gap that was just left after sweeping a high, you know, it confirms to you that that area is a strong area of resistance. Okay, and then so when we look at the fib, just like I said, the 25% level price traded into, and then we saw that price didn't want to go further away from that, and then we saw how price suddenly break down. Now watch this. After price broke down, look at the high. You can all clearly see how price was failing to close with the body above the high. Okay, so we're just waking into, and then it was just a clear sign that we're not going to go back there again. Now let's look at it on the weekly time frame again. You see, when you take the 25% level, the fib from this high to this low, look at where um, our deviations are. The first deviation is below this area, okay, which is below this um, so-called order block in here, which if price invalidates, just like I told you earlier, we want to seek further, lower prices. Okay, so now watch this. So when you look at the first deviation, look at the second deviation. Where does it overlap? It overlaps at an area which is also close to a fair value gap. Where is the third deviation? The third deviation overlaps almost at this area. So I'm not saying that price is automatically going to come down, but when you look at where the deviations are, it tells a story. Okay, it tells a story. And I'm not going to draw conclusions now that price is going to automatically come to these areas, but then the fib levels are telling a story. Okay, the deviation levels are telling a story. Okay, so beautifully you would want to see that even on the weekly we are seeing how price is giving us some point of reference that we can go here, so just below this is a fair value gap, okay, with this low resistance liquidity runs here with the trend line phantom, okay, and then also another one in here. Now let's look at it. Let me zoom out so that we look at it well. I put the areas, demarcate them well, so you can see clearly that there's a fair value gap in here, there's a low fruit hanging in here, this area too, there's a fair value gap in here, there's a low fruit hanging in here, so it can all be areas that price can target. Okay, now so let's look at it on the 12-hour time frame. Okay, when you look at it on the 12-hour time frame, you can see, first of all, I want to draw your attention to this. You can see how the daily time frame fair value gap before the rally up also overlaps with another fair value gap on the 12-hour time frame before the rally up. So you have another fair value gap here, which also acted as the inversion on the 12-hour time frame. Okay, on the 12-hour time frame, you can see that these lows in here are more of a relative equal lows. Okay, that price can necessarily attack these relative equal lows on the 12-hour time frame, coupled with the fact that there are a couple of fair value gaps in here after these lows. Okay, beautifully the same with the other low that was here. See, these are relative equal lows that has these are low resistance lows or swing lows. Okay, trend line phantom that has fair value gap on the daily time frame that price can equally get into. Okay, so basically these are the things that gives you a clear depiction of, okay, price can go here, price can go here. Now if you're on the market, this is the 4-hour time frame. Beautifully, the 4-hour time frame is also confirming that fair value gap that I told you about. You can see how the fair value gap here overlaps with that daily time fair value gap before the rally up away from the high, and then uh, consolidated and paired all the others here before it's rallied down. And when you look at it carefully, what you're also seeing is that price did a lot of give a lot of opportunities right in here inside of this um 4-hour time window before the rally down. So price traded into this, came back down, and then gradually crawled towards the inversion. And when it got here, what did we see? Took the high resting above this area, and then we saw that it broke down. Now price traded back into it, and then see how the bodies of the candles were failing to close above the high on the monthly time frame. The high that was taken, can you see how the bodies of the candles were failing to close above it? And this candle straight into this particular bearish order block, which is this bullish candle in here, acting as a bearish order block, and then price trades into it inside of that daily inversion fair value gap, and then we saw price breaking down further, goes down above the swing point where we had to break the structure, and then we had price failing to continue up higher again. I think you can still get some further clues right in here. Look at this inversion fair value gap before this high was taken, or look at this fair value gap that was formed before the high was swept. Okay, so just before this high was taken, there was a fair value gap that was left in here. Then so this fair value gap extended to my right side, price trades into it and is failing to close above it. Okay, so the same thing we saw here, this fair value gap that was formed prior to the expansion, this wasn't formed prior to the expansion, so this was formed before the high was taken. Okay, but then it also acted as inversion, and price traded into it severally and failed to close above this inversion fair value gap. And look at what price did. Although it was failing to close, but it was also sweeping all the highs resting in here, and then we had a breakdown. Okay, so beautifully, all these things should give you a confluence on where price is likely going to go. So if you have such situation, you put your your stops above this high, or if you are not certain above this high, you know. And so on the 1 hour time frame, beautifully, this is what we have in here. It gives you a more clearer picture. So if this is the inversion on the 4 hour time frame, we have an overlapping 1 hour time frame fair value gap. Okay, now it's also acting as inversion, so now we have price trades into that fair value gap, goes up, comes down, breaks structure here. We saw a retracement in here into this continues, these two consecutive up close candles acting as the bearish order block, and then we have price breakdown. Gives us more room to even re-enter inside of this inversion fair value gap right in here. We have a high, comes down, and the higher high above this high. You can clearly take a trade here. Your stops are above it, and then you see how price rallied down throughout the week. Okay, so this is just a little breakdown on volatility 25. If you have any question, you can leave it in the comment section. If you are new to this channel, please do well and subscribe. I'll see you in the next video. I wish you all the best in your trading journey. See you.